Welcome to This Week in Money, the source for market opinions, brought to you by AmericanManganeseInc.com. Here is Phil Mackesy.
Today, Eric Coffin on Greece and gold, John Rubino on what's next for Europe, and Jeff Berwick talks freedom. But first, Eric Coffin is publisher and editor of the Hard Rock Analyst newsletter. He is online at hraadvisory.com. And don't forget, Eric's at the Toronto Resource Investment Conference, September 27th and 28th. You can find out more details at cambridgehouse.com. Eric, welcome to This Week in Money.
Thanks for having me.
Eric, for our friends who have not met you yet, tell us a little bit about yourself.
I publish a group of newsletters, HRA Advisories, with the Hard Rock Analyst Advisories. My brother David and I started publishing them 17 years ago. Unfortunately, my brother passed away about 4 or 5 months ago, but I'm continuing with the newsletters. Before doing that, we were on the consulting side of the business. Dave sort of on the rock side and me on the finance side in the mining industry. So, I mean, we basically come out of the mining exploration side as opposed to the newsletter stockbrokerage side, I guess you could say.
Eric, should be a wild weekend coming up for Greece watchers. Greece facing elimination Saturday at the football soccer match, Euro 2012. Sunday, another election. We have some news already from Syriza party leader Alexis Tsipras. He promises he's going to rip up that bailout agreement. He's pointing to Spain. And in the latest HRA journal, you're talking about the world's dumbest politician. And a surprise, it is not Mr. Tsipras.
No, the world's dumbest politician is actually his chief opponent, who's head of the New Democracy Party, who, for reasons known only to him, thought that after his party had cooked the books for 10 years and basically helped to create most of this problem, that he would go along with the bailout in February, but the condition of his doing that was forcing an election last month. And apparently he was under the impression that his party had done such a wonderful job with things that he was going to come out of it with a majority instead of getting his behind slapped. It was an astoundingly stupid piece of political analysis on his part.
So what happens now with the election? Well, what's your take, and where do we go from here with Greece?
Well, Greece is one of those places that has the probably sensible rule that you're not allowed to publish polls within about 3 weeks of the election. So the most recent things I've seen, I believe, are June the 1st, and at that point it was literally neck and neck. Both the New Democracy Party and our friends, the left-wing coalition, they were both getting more votes. They were both at about 22%. That won't get either of them. You know, if that's how it comes out, neither of them is going to get a majority. It's going to have to be a coalition again. Both will have to see who gets one. I think if they got either one of those two, whoever comes out ahead, if they got voting in that range, you add the 50-seat bonus you get, it's presumably going to be one of those two parties who's going to be forming a coalition. I hope for Greece's sake, really more than any, that it's the New Democracy guys. Not because I don't think he's still the world's dumbest politician, but because the repercussions for Greece would be enormous and really unpleasant.
Fascinating nugget in the article. Polls indicate 70% of Greeks want the bailout package renegotiated. That's exactly the same percentage who want to stay in the euro. How the hell are they going to square that one?
They're not. I don't think they're going to. I mean, it's just. I mean, if there's a problem with Greece, and it seems to have had this problem for a long time, it's that everybody there wants to have their tiramisu and eat it too, and it's just not going to work that way. You know, I mean, the EU. I mean, if you look at some of the stuff these guys have done over the last couple of years, they're not exactly the world's most decisive politicians, and they still haven't, even though everyone's been telling them this since 2008. They've never really brought out the bazooka. So, I mean, to be fair to this left-wing guy, I can appreciate him thinking he might be able to call their bluff because it's not like it hasn't happened before. But I do think there's Northern European votes involved in this now. I mean, in order to do anything really large, all the member states, you've got to get some sort of either cabinet-level authority or you actually have to get a vote in the individual parliaments. And some of the northern parliaments especially, where you've got people paying much higher tax rates than the Greeks and having 67, 68 as being their retirement age, looking at a place where nobody pays that stuff and the retirement age is 60. And you know, you think these guys are going to vote to, one, bail you out, and two, let you keep the currency? I mean, I just don't see it happening. Even if the EU caved, I don't see all of the individual members voting for it. I think it would be next to impossible to see that happen.
We're talking to Eric Coffin from HRAadvisory.com here on This Week in Money. And Eric, how does this bode for the future of the European Union and of Europe itself? It sure doesn't look optimistic, does it?
It doesn't look optimistic. I mean, personally, I'm one of those guys that thinks the euro is probably going to survive this. I mean, one of the absurdities of this whole situation is when you look at Greece in relation to the EU, it's 2% of the economy. I mean, it's really not that important. I mean, the biggest problem here is that they didn't deal with this 3 years ago, and that it keeps dragging on and on and on and on. You're going to have, if this goes the wrong way, you're going to have contagion effects. How bad those are really is going to depend on how. It's not so much how the vote goes, but how does the EU react to it? I mean, personally, the only thing that would make sense to me as the vote goes the wrong way is that the ECB essentially does what the Fed did in the U.S. 3 years ago. And after you just open the floodgates, you just totally open the floodgates and say, I will buy every bond you throw at me. And I mean every single one of them. Because someone's going to have to put a floor under the Spanish and the Italian bond markets, especially the Italian one, because the Italian bond market is actually very large. It's a very large, well-developed bond market. That's not a bond market they can have go sideways because it's way too big.
You're saying in the article here, Eric, it's far more important to ensure Spanish, Italian, and French bonds don't crash than it is to save Greece. Can you see a scenario where Greece gets thrown under the bus here?
I can certainly see that scenario. I mean, part of the reason why the left-wing coalition thinks that they can call the Europeans bluff is that the net effect of the last bailout, the second bailout, if you will, the one in January, February, is that most of the Greek government debt is now owned by EU institutions. It's not very much of it's in the private banking system, except in Greece itself. So, I mean, you may have the guys in Brussels saying, okay, there's not going to be that many contagion effects because we basically own all these bonds. So that's it. You're out of here. And if you look at the total, the current total, you're looking at 300 billion euros. Yeah, that's a lot of money. But in relation to the EU economy, it's not really that big a deal. I mean, they could take that hit fairly easily as long as they could keep the contagion effects down. I could definitely see some of the larger euro members saying, you know what, let's just cut it off right here, like they're done.
Eric, the question we're all asking today is how does what happens in Europe affect gold? It's over 1,600, been going up all week. Where do we go from here with gold? What's gold telling us?
Well, I mean, gold seems to be telling us two things. It's telling us that you've been seeing weaker and weaker numbers coming out of the U.S., and you've got a lot of guys in the gold market betting on the Fed right now. You're in one of those strange market scenarios where bad news is good news. Like a couple of weak U.S. numbers come out, and like today, a couple of weak numbers come out, and the U.S. market goes up 150 points, and it did that because people are assuming, okay, well, this means that the Fed's going to pull the trigger. I think if things go sideways in Greece, it's no coincidence that Bernanke is refusing to let himself be cornered and say what he's going to do, because the next Fed meeting is 2 days after the Greek election. And he's, I'm sure he's sitting there saying, well, I'm not going to make any decisions until I see what happens in Greece. If it goes the wrong way, at the very least, I think you'd see those guys keeping Operation Twist, which is where they buy the long end of the bond market to push the rates down. I think at the very least you'd see that. You might even see QE3. I think you'd probably have to see something like a QE2, I guess it would be, from the ECB, because I think just to try to keep things stable, they would really have to open the floodgates as well. In terms of short-term gold moves, if Greece goes the wrong way, my expectation would be at least for, a week or two, and certainly in the first couple of trading days, you're going to see the euro get whacked. Gold has been trading with the euro by and large, so I think there's a chance if it goes the wrong way, you'd see gold drop for a day or two. But if the Fed comes in during their Fed meeting Tuesday, Wednesday next week and says, we've got to do something, here's QE3, then it's going the other way, and you could see a big step up. And if the Greek election goes the right way, there's so many guys short the euro right now that I wouldn't be surprised to see the euro go up 2, 3, 4 cents in the space of a couple of trading days. And if that happens, I'd say odds are good. You see $1,700 gold real quick.
Seems like whatever happens, we're going to look at a whack of volatility over the next little while with gold.
It's going to be crazy. I mean, I think what you saw early this week after the Spanish, kind of bank bailout, that's a taste of what we might see next week.
Okay.
Where things went 200 points in one direction, then 200 points in the other direction, then 200 points in the other direction. It's going to, I would expect something like that, except even larger. Like it's going to be pretty hairy next week.
We're talking to Eric Coffin from HRAadvisory.com here on This Week in Money. And Eric, what about the outlook for folks investing in gold stocks? Do you feel like our friend Jeff Berwick does, that we're in for a final bubble in gold stocks here?
Oh yeah, I don't think we're done yet. If you look at you look at the gold price versus versus Huey or the TSX Gold Index. Pick any one you want. Those stocks are as cheap as they've ever been, really, in relation to the gold price. And it's not like, although there have definitely been price pressures in the mining business, price inflation on the energy side, on the wage side, most of these companies are making a lot of money, and it's not really being portrayed in their share prices. By and large, I think what you've seen is a long-term shift that had to happen at some point where at $300, people were willing to pay 50 times earnings for gold producers because they thought gold was going to $1,500.
Yeah.
Well, gold's at $1,500, so they're not going to pay 50 anymore. But, they may pay 15 or 20. Right now, they're paying about 7 or 8. I think if people feel like we're going to have any kind of a reasonable upleg in gold, I think you'll see quite a strong reaction to the gold producers, and it'll just move down the food chain the longer that up leg goes.
Seems like I've been saying for more than a year or so that there's a huge opportunity in gold stocks. There is still an opportunity there, I guess.
Oh, there is. I mean, it's not, this market's not going to be for the faint of heart until a couple of these things get settled. But, I think if you're buying companies, I mean, if you step back for a second and say, okay, and there's nothing special about gold stocks. If you're buying companies that at current prices and even well below current prices are able to generate the kind of cash flow multiples that most of the big gold miners do, I mean, those aren't particularly dangerous stocks. I mean, be smart about it. I mean, pick bad days, weak days to accumulate them, but they're not crazy. They're not crazy, scary stocks. I mean, right now you're buying low PE companies that have huge amounts of cash, and most of them don't even have any debt. I mean, they're good companies.
Eric, I know I speak for all of us when I say how sorry I am to hear about the recent loss of your brother. I never met your brother, but I want to point to our friends to this website, thewaterproject.org. Nearly 1 billion people have no access to clean water, and David wanted to do something about that. Yeah,
and Dave, that was one of the things Dave talked about a lot. And when Dave died, I set up this page for him, and basically what that is it's donations to a very low overhead. It's a U.S. charity, and the Canadian listeners, if you want a Canadian one, I would point you to one called Ryan's Wells. They basically both do exactly the same thing. They go in and they build wells in villages in Africa. They cap them. They put sanitary pump units on them. They teach the people how to use them and make sure they stay clean and that the well bore stays clean. And essentially you're delivering nice, clean water. Each one of these wells is a village. David's account, if you will, I just released a bunch of the money to the organization. What they're going to be starting after the rainy season is what's called the sand dam. And what sand dams do is they raise the water table for a whole area. That means you can do shallower wells to service the two villages right next to it. But what it also does is it actually increases the amount of arable land, because after the rains, this big sand pile that piles up behind the dam holds water, and it doesn't evaporate that fast because it's actually subsurface. It's quite cool, actually.
Great idea, and a great way to remember your brother, thewaterproject.org. Eric Coffin, editor and publisher of the Hard Rock Analyst newsletter. He is online at hraadvisory.com. And don't forget, Eric's at the Toronto Resource Investment Conference, September 27th and 28th. Mark your calendar and register at cambridgehouse.com. Eric Coffin, thanks for this.
Thank you for having me.
This Week in Money is archived online at talkdigitalnetwork.com.
John Rubino is co-author of The Collapse of the Dollar and How to Profit from It. Visit John's website, dollarcollapse.com. It's your ringside seat for the global financial crisis. John, it is good to have you back on This Week in Money.
Great to be back. Thanks, Phil.
We are for sure in a global financial crisis. The only thing these days, John, in worse shape than the dollar these days is the euro. That's all we're reading about. How did Europe get itself into such a huge crisis?
Yeah, it is kind of funny. With all the problems that the U.S. has, that we aren't anywhere near the top of the headlines now, because Europe is in so much worse shape than we are right now. You could read the papers and not even notice that the U.S. was headed for a gigantic train wreck. But the reason for Europe being center stage right now is that when they created the common currency back in 2002, it had some really egregious design flaws that are now becoming apparent. And the biggest was that that was a monetary union without a fiscal union. In other words, everyone had to live under the same monetary policy using the same currency, but they retained control of each national budget domestically. In other words, Spain and France and Italy all controlled their own military budget, their own taxation, their own retirement plans. And the fact that they were all able to borrow in euros fooled the markets for a while into thinking that all euro-denominated debt was the same thing. So for a few years there, Greece and Ireland and Spain and Portugal were able to borrow at the same rate as Germany. And so borrowed they did. You know, they were offered essentially unlimited free money, and they took advantage of it, and they ended up with all the usual debt-related pathologies. But the problem now is that they don't have the usual remedies. It used to be that if a country got into financial trouble, it would devalue its currency, and in that way become more competitive and lower the cost of its existing debt because they could then pay the debt back off in cheaper currency. Well, they can't do that in the Eurozone. They're all tied into a currency that is basically controlled by Germany on German terms. And so they can't devalue. So what's left is basically austerity, where there's no choice but to try to cut their labor costs to become competitive rather than devalue their currency. And that's a recipe for deflation or a depression, depending on how much debt you start with. And since these guys started with immense amounts of debt, they're all in depression right now, all the peripheral countries. And the reason that is a problem for the whole global economy is that European banks have lent money to other European countries on a scale that means that even if Greece, a little tiny country with 2% of European GDP, leaves the Eurozone and defaults and devalues its currency, going back to the drachma, that would be enough to start a cascade failure of the whole system. It would throw the banks that have lent Greece and Spain and Italy so much money into default themselves, which would basically bring down the financial systems of Spain or of France and Germany and the other relatively strong European countries. And so you'd get a continent-wide depression. And that's what they're staring at. They don't really have a choice now but to try to do a fiscal union where some Central European authority, led by obviously Germany, is going to have control over the retirement plans and the military budgets and the tax structure of all the other European countries. And, it's not easy to get from here to there, and it's not clear that even doing that would save them. So each election becomes an event risk, each bond sale becomes an event risk, and you never know when the catalyst will occur that brings down the home system, but it looks like it's coming.
Okay, if the euro does not work as a common currency, what's the option for Europe? What's the future for Europe?
Well, the countries with the most debt could just leave, go back to their old currencies and devalue. But that would be debilitating for the big banks that have lent them a lot of money. So that's an option that, it might happen because of elections in which, say, Greece decides it just doesn't want to be in the euro anymore and they leave. But the people running the Eurozone hate that idea because it would cause a contagion that might bring down the whole banking system. So the only alternative that they can see is to basically merge all the economies into a big United States of Europe, with a central government in control. And then they'll have to devalue the euro really dramatically, because that's the only other solution. You can devalue at the Eurozone level, even if Spain, for instance, can't devalue its own currencies. So what will happen once they begin creating a fiscal union is that they'll have to have the European Central Bank finance the whole show, which in effect is going to knock down the value of the euro, and then it would be hoped make the whole continent competitive enough to be able to pay off its debts. But of course, that takes us into Jim Rickard's currency wars scenario, in which the U.S. and China and Japan are all hurt by a falling euro, and then we all have to take steps to lower the value of our own currencies, and you get a race to the bottom of all the major currencies in the world being devalued aggressively against each other, which means against hard assets, in which case gold and silver would just go through the roof because nobody would trust paper money anymore. And again, that's kind of what we're headed for because the other alternatives are even worse in the short run. So politicians, being the short-term time horizon creatures that they are looking at the next election and deciding what to do based on what gets them through the next election with the highest probability of re-election. So easy money is always the answer to that question. And so that's what we'll see going forward, more than likely. And it's phenomenally good for hard assets if that's true.
We're talking to John Rubino. John, 5 years ago when you wrote the book, The Collapse of the Dollar, did you think we would see the collapse of the euro? What did it look like back then?
Well, Europe was a mess back then, just like the U.S., but it wasn't clear at the time that Europe was going to be the front page story that it is today. Back then, the question was something called eurosclerosis. Europe had adopted a common currency and was hoping that would make it more efficient, everybody having to live under the same relatively strict monetary regime. But at the time, their labor laws were really onerous. In other words, if you hired someone, if you were running a business in most European countries, it was almost impossible to fire that person once you hired them. And so the irony of a law like that is that it results in way higher unemployment because nobody wants to hire people if they can't then fire them. And so you had structural unemployment that was much, much higher than the U.S. You had very little mobility of capital or labor. And so you didn't have the preconditions for an increasingly efficient capitalist economy. And so it looked at the time like Europe would go the route of just borrowing more and more to fund ever more generous retirement plans until it collapsed under the weight of its own debt. It wasn't apparent at the time that you'd see the peripheral countries be the catalyst because they weren't borrowing incredible amounts of money at the time. That came later, but that is what ended up happening. You saw some of the European countries actually becoming more efficient, like Germany, and others keeping the same old extremely inefficient structures, but just borrowing a lot of money. And so Europe is now, the epicenter of the global economic collapse. But obviously, it's not the only country with any problems. It's just the country, or it's just the system that looks like it's going to blow up first. And even if you took Europe out of the equation, we would still have a global collapse on our hands. It's just that Europe looks like it might be the catalyst now rather than just one of the bystanders.
John Rubino, our guest on This Week in Money, and in the book you talk about the dollar disease spreading to the euro, and the problem being it falls not against the dollar, but against tangible assets. That's the scariest scenario of all, isn't it? Yeah,
when you look at currencies, and when commentators talk about one being strong and one being weak, they're usually talking about them versus other currencies, which is a false analytical perspective because if all major fiat currencies are being devalued aggressively by their governments, which they are, then they're all going down. They're just going down at varying rates. So when you talk about one being stronger, you're really talking about it falling at a slower rate,
yeah.
Which is what's happening with the dollar right now. We're actively trying to inflate away the value of the dollar, but it's up against the euro lately. So people think of the dollar as a strong currency, but really what's happening is that the dollar is a weak currency, but the euro is an even weaker currency. And so what you need to do is measure currencies against real assets over fairly long periods of time to take out the temporary squiggles. And if you do that, you see that oil and gold and land and just about everything else that cannot be created in infinite quantities by governments has been going up in price when you price it in terms of paper currencies, which is the same thing as saying paper currencies have been going down in value. And that's across the board. Almost every major currency is being depreciated right now. And all that differs is the rates. So the foreign exchange markets really don't tell you much of anything about the quality of a country's economic management and the stability of their monetary policy.
We're talking to John.
So
Go ahead, John.
Always look at hard assets and not other currency values.
John Rubino, our guest on This Week in Money. Let's talk about some specific European countries here. Spain, of course, in the news this week. $125 billion bank bailout deal over the weekend really did not convince markets that Europe has done anything, and it just does not look good for Spain at all.
Well, Spain's particular mistake was that when they were offered unlimited amounts of free money, they embarked on a housing bubble that dwarfs the one that happened in the U.S.
Mm-hmm.
You know, ours was bad. By the way, so's Canada's right now.
Yes.
But nothing compared to what Spain went through. And it happened, in about the same time frame as that of the U.S., but our bubble burst, and we've been kind of sort of wiping out some of the bad debt over the last few years. But Spain has done the opposite. They've tried to prop up their banks to a greater extent and just not have them take the losses. And so you've got an imploding real estate market in Spain and massive unemployment because of that. It's up over 20% now. But the banks haven't yet written off a lot of the bad debt. And so their balance sheets are horrendous. Nobody in their right mind wants to lend money to the big Spanish banks. And so they're basically insolvent. And so what's happening now is that the European authorities are bailing out Spain via their banks. You know, they're making it look like just a bridge loan, get you through some hard times, and then you'll be fine in a couple of years. The way they talk, you would think that that's what the scenario is, but the problem is actually much deeper than that. These banks might possibly be propped up by 100 billion euros for a while, but the Spanish government is being at the same time bailed out by the banks who are being asked to buy Spanish government debt. So you got this this kind of daisy chain where the governments are bailing out the banks, who in turn are bailing out the governments. And so in the end, it's all an illusion, where the money is being created out of thin air to prop up governments that are insolvent, which are propping up banks that are insolvent. And the only way it can go on is if the euro stays valuable in the global financial system. Same thing with the dollar in the U.S. You know, we can play our games as long as people want dollars. Well, the Europeans can do the same thing. As long as the euro is considered real money, then they can continue to borrow huge amounts of money or create it out of thin air via the European Central Bank and prop up these insolvent countries and their insolvent banking systems. But when the value of the euro begins to really fall, or interest rates really begin to spike, which is kind of a manifestation of the same loss of confidence, then you'll see the game end. And so this might keep Spain going for a little while longer. You know, they might do the same thing with Greece and keep them going for a while longer, but they can't keep all these plates spinning at the same time. When Italy needs help and Portugal needs help and Ireland needs help, at some point it all blows up. And, you know, Spain might be the catalyst. The Greek elections might be the catalyst. Germany finally saying no to the whole thing might be the catalyst. There's no way to know what blows this thing up, but something will happen at some point in the not-too-distant future to stop the European illusion of stability, if not prosperity.
John, in the book, you see we've got a pretty stark choice here. Either the countries that are most indebted simply collapse and take down the system, or the central banks just start printing money and then currencies collapse versus real assets. Which way are we going? And aren't those both kind of no-win scenarios?
Oh, yeah, they're totally no-win scenarios, but it's all we have left. You know, when you borrow a sufficient amount of money, you lose control over your life, and you're confronted with just choices of different kinds of disasters, whether you're an individual or a family or a country. You know, it's all the same thing, and it's just common sense, and that's where we are now. We've borrowed so much globally, you know, the Europeans and the Japanese and the Americans, that we really do have only two choices. We collapse under the debt, or we try to inflate our way out, and we've definitely chosen to try to inflate our way out. And what that means is that if we succeed, we will succeed by printing or otherwise creating huge amounts of new currency, pumping it into the banking system and into the housing market, places like that, keeping asset prices propped up, but at the cost of diminishing value of our currency. And that'll go on until people just give up on these currencies or on the whole concept of paper money. And then the system just collapses. And then we get our deflationary crash that we would have gotten today if we bit the bullet now and just tried to get rid of this debt via spending cuts, you know, and so there's really no way of avoiding a deflationary collapse at some point. The only question is, do we delay it by depreciating all the major currencies of the world, or do we just take our medicine now? And, you know, clearly we're trying to delay it. No politician who has to get elected in 6 months or a year is going to voluntarily accept a deflationary crash. So it shouldn't be a surprise to anybody that if you give these guys printing presses, they're always going to behave in ways that make it most likely that they'll get through the next election. And that's what we're seeing all around the world.
John Rubino is co-author of The Collapse of the Dollar and How to Profit from It. You can find John online at dollarcollapse.com. Hey, John, it's always a pleasure to talk to you. Thank you, sir.
Great. Thanks, Bill.
This Week in Money is archived online at talkdigitalnetwork.com.
Jeff Berwick is founder and chief editor of The Dollar Vigilante. It's a free market financial newsletter, and Jeff is online at dollarvigilante.com. See Jeff at PorcFest, the Porcupine Freedom Festival in Lancaster, New Hampshire next week. Info at happyporcupine.info. And don't forget, Jeff's also, along with Doug Casey and a lot of other great folks, at Freedom Fest 2012 in Las Vegas, July 11th to 14th. Information at freedomfest.com. How you doing, Jeff?
I'm doing great. How are you doing, Phil?
We have been talking about freedom, Jeff, and how easy it is to lose it. It's usually taken from us by force, but in strange circumstances you're talking about lately, we ask, even demand limits on our freedom, usually in response to the latest threat. In this case, bath salts. What's going on here?
Yeah, it's incredible. One of the things I wrote in my blog last week is how the financial elites, of course, have been trying to enslave us for a number of decades, if not centuries. But really, it's slave-on-slave action at this point. We actually enslave ourselves just as much as anyone else does. And, as you know, I've been talking about this for a while. We've never been more enslaved in human history. You look at, the state takes half of our income, property taxes, income taxes, gasoline taxes. I could go on and on. You need permission to work, permission to travel. And really, though, when I saw this news a week or two ago about the naked man who ate someone else's face off, it really opened my eyes to just how deep the slave-on-slave enslavement is, because as you know, there was a man in Miami, and he ate someone's face off, and the reporters all discovered that it was bath salts that did it, and I'd never heard of bath salts, and neither had anyone else. And so they went out and they did a survey, and they were talking to people on the street, and they would say, have you heard about what happened in Miami? And everyone would say, oh, yes. And they'd say, did you hear it's because of bath salts? And they'd say, no, what's bath salts? And they'd say, well, we're not sure what it is either, but do you think they should ban it? And almost everyone said yes. And it's just amazing how people will be so quick to want to ban something they didn't even know existed 10 seconds ago. And that's just the way it is today. And you look in the U.S., and these are all recent news stories. In a New York suburb, they just passed a law that will fine you up to $10,000 if you don't mow your lawn. In a Massachusetts town, they're trying to outlaw public swearing, so you'll get fined for that. And in North Dakota, many people probably are aware that because of the shale oil gas there, they've had quite a windfall, a tax windfall. And so they actually have so much money in the government that they actually had a referendum to see if people want to stop just paying property taxes because they don't really need to do it anymore. And it was overturned by a big margin. So it just goes to show the people are just, and used to their slavery. They just don't even know what they would do with that money if they weren't giving it to the government at this point.
It's like the jailers flinging open the door to your cell and saying, you're free, off you go, and you think, well, maybe I'll stay here for a while. This is pretty cool.
Yeah, and with these bath salts, it's sort of interesting. Every time there's a new drug that comes out that they put on the news, I remember crack cocaine back in the 80s, yeah. That was a big thing, and then meth was the last decade's big one, and now I guess it's bath salts, but they always use these things to try to scare people. But the thing is, if bath salts actually turns you into a zombie that eats people's faces off, it's not really going to catch on with the kids too much. I don't think.
I wouldn't think
maybe
so.
One or two kids will try it, and that'll pretty much be the end of it. You really don't need to ban it. But really, this is all caused by the war on drugs. The war on drugs has made quite good natural flowers like marijuana or coca leaves quite incredibly high price. Cocaine would actually cost about the same as sugar if it was produced in the free market, because it's a black market or illegal substance. It's way overpriced, so many people can't afford it. So they have to keep doing these chemicals, and these chemicals just seem to be getting worse and worse. And this is what happens. And now we're at the point where the chemicals are so bad that people are turning into zombies. And to me, I just recommend to people to look at living in other countries right now, because especially in the U.S. or even most of the Western countries, most people are really in this slave mindset, and most of the rest of the world isn't like that. And as the U.S. dollar continues to collapse, I think they're going to start to really eat each other alive in the U.S., and they've already started, as we can see in Florida.
Zombie apocalypse, right?
Yeah, it's just incredible. All these things, and a lot of these become about through what's been going on in the Western world for decades, the fluoridization of the water, the public indoctrination, putting people on chemicals. There's so many kids just get thrown on chemicals if they start to what they call be hyperactive, which just means they don't want to sit there in a seat for 8 hours a day and listen to totally useless information. But nowadays, when I was younger, they just call you hyperactive. Nowadays, they put you on Ritalin or all sorts of chemicals, which really almost lobotomize you. So this is just another symptom of all the things going on, all the things that the government is doing in the U.S. and the Western world, which is causing people to become more and more like zombies.
So, Jeff, talk to me about countries like Mexico, where things are more free. We'll ignore all the BS headlines about what's going on with the gangs, et cetera, in Mexico. You're in Acapulco. Tell me how that is more free than places like Canada and the U.S.
Oh, it's far more free. Hardly anyone here really even pays attention to the government. And so that's sort of what I'm talking about. In the U.S., the people will enslave themselves so quickly. Whereas down here, no one ever really says, oh, we need the government to get rid of that, or we need to ban that. If anything, there was a large protest, there still is large protests going on to stop the war on drugs here. So they're trying to get rid of government involvement in their lives in any way. And there isn't very much government involvement. Not many people pay too much attention to it. But up in the northern parts of North America, people just seem to have really have Stockholm syndrome. They're almost love their own slaveholder, and they cherish it. They really look at the government as something that they really need and want, and wouldn't know what to do without.
If I'm thinking of becoming an expat, Jeff, leaving Canada or the U.S., we've talked about Mexico. What other opportunities are there around the world? What other countries do you like?
Oh, there's so many. There's hardly any countries I don't like. My favorite two regions by far are Asia and Latin America. Asia is where all the growth is going to be and is right now. Places like Singapore, Hong Kong, Malaysia, even Thailand, Cambodia. If you're looking for a real ground floor opportunity, I think that's the place to be for a younger or just an entrepreneurial type person who wants to get down in the ground floor at the very start of something great. I think Cambodia is the place to be. If Latin America is more your flavor, I think there's so many places. I like Mexico as well. Nicaragua is great. I really recommend that to anyone who, again, that's sort of the Cambodia of Asia is Nicaragua. Okay. It's a very ground floor sort of opportunity. Lots of freedom, hardly any government involvement. Other great places to make a living in Latin America are Brazil, Chile. You can do it in Argentina, but you have to watch out for that government there. And so you'd have to pretty much run a black market business there because the government's highly socialist and very involved in the economy. But there's lots of opportunities, plenty of opportunities. And I really tell people to open their eyes to it. You know, thanks to the internet, thanks to air travel, ATM machines, cell phones. Really, it's never been easier just to pick up and go somewhere and just try it out. And worst case scenario, it doesn't work out, you just go back.
Now, you're putting your money where your mouth is. You're helping folks who want to expatriate. How do we do that?
Well, many of the ways that we try to help, we've started up a number of different programs and services. We offer passports or residency services in a number of different countries. We currently offer in Cambodia, interestingly enough, Dominican Republic, Dominica, St. Kitts and Nevis, and Paraguay right now. We offer passports and residency programs. Those are a number of places that I really like, besides just the fact that you can get passports there. We also offer things like international business corporations. You can see that at tdboffshore.com. We basically, our whole foundation of Dollar Vigilante is helping people to prosper and survive during and after the U.S. dollar collapse. So all of these things are all intertwined, just finding ways to survive over the next few years, especially as the U.S. basically collapses.
We're talking to Jeff Berwick on This Week in Money, not just the collapse of the dollar, but you're talking in pretty stark terms on the blog about the end of the monetary system as we know it, Jeff.
Yeah, and that's, again, what the Dollar Vigilante is all about. There's no doubt about it. That's where we're headed. I came across a Leonardo da Vinci quote this week, and he said that there's three classes of people: those who see when they're shown, and those who don't see. And I think today, thanks to public schooling, most people are of the third one, people who just don't see. They just have not been taught how to think critically. And actually, they're taught not to. That's what schooling's all about, is memorizing rote data from the government. And I took that opportunity to look back to Leonardo da Vinci's time and compared him to one of our most famous people today, Barack the Bomber Obama. And, you look at Barack Obama. He smoked a lot of weed. He did some blow, as he's admitted. He's basically raised, for all intents and purposes, by Henry Kissinger in a test tube. He went to Harvard, where he studied the millions of laws that enslave us today. And then he became a community organizer, whatever that is.
Yeah.
And now he just reads off teleprompters and basically kills people and destroys lives and puts people in jail and in cages for things that he readily admits he did most of his life, marijuana and cocaine. And so comparing him to someone like Leonardo da Vinci, who never went to a school as we know it. Here's a guy who was born in 1452.
Wow.
He went on to invent the helicopter, parachutes, gliders. He created the first robot in human form. He built a walking mechanical lion. He built a spring-powered car considered to be the first programmable computer. He knew the Earth wasn't the center of the solar system before Galileo was even born. He painted the Last Supper, and he went on to demonstrate the human anatomy with accurate graphical presentation. And so that just goes to show you how this public education system is working out for us, the difference between those two guys.
We're talking to Jeff Berwick here on This Week in Money. I want to point our podcast friends to an article in Monday's Dollar Vigilante by Brett Heath. Is the Fed getting ready to juice once again? And today we see on CNN Money, Jeff, that stocks are rallying on hopes for a Fed stimulus. Here we go, bud. Yeah,
well, there's no way out. They have to do it. It's just a matter of when. I don't believe they're going to do it for at least a couple more months. But they could do it at any moment. But there is no option out for them. If they want to keep this financial system alive, they have to keep inflating, because otherwise rates are going to go up. And once rates hit 10%, pretty much all of the tax theft revenue of the U.S. government will go just to interest payments alone. So this is the end game of this monetary system. That actually died in 2008. George Soros said that recently. He said in 2008 the financial system died, and all we've done since then is inflated to try to keep it looking like it's alive. It's basically a Frankenstein economy at this point. But there's no other way. They have to keep inflating. It's just a matter of when, and that's the game. Like there's nothing involved anymore in investing other than watching what Ben Bernanke's doing. It's just terrible that everyone just watches this one central planner, this communist-style central planner, this price fixer of the interest rates, and just watch what he does. And it's just terrible, because the free market would not be like this at all. We'd be watching all sorts of entrepreneurs and capitalists doing all sorts of amazing things, and there wouldn't be one person that we'd watch. But this is what governments do. Government, in its form, is actually a form of communism. It's central planning. And it never works, and it's terrible, and we're just witnessing it all over again right now in the U.S.
So, Jeff, how can you and I protect ourselves against what's going on?
Well, I think there's many ways. Like I just mentioned, you can get another passport is an excellent way to protect yourself. I would also buy definitely some precious metals. Anything that Ben Bernanke can't print is something good to own at this point. And what I also recommend is get them outside of the control of your own country, because your own government, especially if you live in the West, as their tax theft receipts and revenues go down, they'll be looking to take more and more from their citizens in the form of tax, or even confiscating or taking over retirement funds. So definitely get some of your precious metals outside of the country if you can. We wrote a report called Getting Your Gold Out of Dodge, which you can see at goldoutofdodge.com. Get a second passport, get a foreign bank account. We can help you with that. There's all sorts of different ways. As well, I think that we're going to have a final bubble here. I think the final bubble will be in gold and gold stocks. And so I would put a small part of my money into some of these junior gold stocks, which are actually trading at pretty much all-time lows right now.
Yeah.
And I think if you combine all of those things, you'll do pretty well, and you'll survive this collapse a lot better than most of the zombies out there.
Visit Jeff Berwick at dollarvigilante.com. And don't forget, Jeff's at the Porcupine Freedom Festival, Porkfest in Lancaster, New Hampshire next week. Info at happyporcupine.info. And Jeff's also at Freedom Fest 2012 in Vegas, July 11th and 14th. Info there at freedomfest.com. Hey, Jeff, as always, thank you, sir.
My pleasure, Phil.
Thanks to our guests, Eric Coffin, John Rubino, and Jeff Berwick. And thank you for listening. I'm Phil Mackesy for AmericanManganeseInc.com. We're back next week with another edition of This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.